Messy books are more than just a headache. They are a barrier to your company's scalability. You cannot raise money, sell the business, or survive a review on books that nobody can defend. So let's talk about how a real cleanup actually works. 5 phases: reconstruct, reconcile, validate, and maintain, because a cleanup you have to repeat in 2 years is not a cleanup. First, the part most owners underestimate: what a multi-year backlog actually costs you. The failure to file penalty runs 5% per month, up to 25% of the tax due. Failure to pay stacks another 0.5% monthly on top. And here is the one that matters most: if you never filed, the statute of limitations never starts running. An unfiled year stays open forever. A filed year generally closes in 3. That single difference is why filing something imperfect beats filing nothing at all. And if you still don't file, the IRS can file for you. It's called a substitute for return, and it uses your reported income with none of your deductions, credits, or cost basis. Then it bills you from that number. And audit selection is increasingly automated. The IRS now uses AI and data analytics to help flag returns. Non-filing and mismatched third-party data are precisely the patterns an automated system surfaces first. Phase 1. Diagnostic triage, because before you fix anything, you need to know exactly what is broken. We scan every bank and credit card account, month by month, including closed ones. We find the gaps in statement coverage. We check whether there is a defensible opening balance at all. And we look for structural breaks, duplicated charts of accounts, negative asset balances, orphan entries. Undeposited funds and opening balance equity are where messy books hide the bodies. If either one is carrying a large unexplained balance, you don't have a bookkeeping problem, you have a reconstruction project. Then we sequence by risk, not by date. Unfiled returns first, payroll tax gaps second, because that exposure is personal, not just corporate. Sales tax third, categorization last. It matters, but it is not what creates the liability. Phase 2. Reconstruction. This is where the volume problem gets solved. Modern OCR digitizes years of paper receipts, statements, and invoices into structured data. Batch rules and machine learning code the high-volume repetitive transactions. And duplicate detection catches overlapping imports before they compound. But be clear about the limit. Automation handles volume via 800 identical transactions that would take a person 3 weeks. Humans still handle judgment. Is this a distribution or a loan? A repair or a capital improvement? Get those wrong at scale and you have built a fast, confident, wrong ledger. Speed without review just produces organized errors. Every automated batch we run gets sampled and checked by a trained accountant before it is accepted. Phase 3. Making every dollar defensible in a review. Defensible means every account reconciles to the statement every month with no forced balancing entries. Every material transaction has a source document behind it. Owner and intercompany transactions are identified, not buried in suspense. And the balance sheet is proven, not plugged until the P&L happen to look right. And a cleanup does not only cost money. Years of unplanned deductions surface once the data is properly categorized. Duplicate payments and uncredited estimated taxes turn up. And penalty relief, first-time abatement, reasonable cause genuinely exists, but somebody has to actually request it. Finally, we validate against third-party records, the bank, the payroll provider, and the IRS transcripts. Never against the old file. The old file is what got you here. Phase 4. What all of this actually unlocks. Lenders want 2 to 3 years of consistent, reconciled statements. In a sale, diligence kills more deals over messy books than over weak numbers. And you can finally see your actual margin by product, by customer, by month. Then the maintenance cycle. Bank feeds reviewed weekly, not saved up for year-end. Every account reconciled by the 10th business day. A closed checklist with one named owner. And a quarterly review with whoever files the return before the filing, not after. A cleanup is a project. Clean books are a habit. If you only buy the project, you will be buying it again in 2 years. We run cleanups on a fixed scope and a fixed fee. We diagnose first, then quote, so you never sign an open-ended hourly project. Certified QuickBooks and Zero advisors since 2013, and every AI-generated entity is reviewed by a trained accountant. If you have years of records you have been avoiding, book a free 15-minute consultation. We will tell you how big the project actually is, and if it's smaller than you fear, we will tell you that too.